Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, September 9th, 5:41 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in a mild correction. Check the trend gauge over here. We've got the red arrow on market leadership. Quite a few leaders that were holding up came apart last week. But over the weekend, I was pretty easily able to rebuild a 21 over 21 list with stocks that are holding up. In fact, probably could have made two 21 over 21 lists, and that's even excluding staples and names we just don't put on something like that. So some pockets of leadership across diverse sectors, but anything really tech related, not included in this list. There are a few, but for the most part, uh, the tech leaders from this prior uptrend have broken their 21 and in a lot of cases their 50-day moving average. Our short-term trend gets the red arrow also, as all five of the major indexes are trending below their 21-day short-term moving average. Mixed bag on the 50-day. Above the 50-day is the equal weight S&P and the Dow. NASDAQ 100 and mid small caps and the market cap weighted S&P 500 are below their 50-day moving average. Maybe we're being a bit generous with the yellow arrow here, but like I said, between that, some leaders holding up and the RSP looking like not much of a correction at all, yellow seems more appropriate than and we're still above the 100-day moving average as well. This just seems more appropriate. Long term, all five of the major indexes, six if you include the RSP, are above their long term 200-day moving average. As I remind everybody, the market never gets into serious trouble unless we break that level. All bear markets throughout history occur once a break of the 200-day simple moving average on the S&P 500 occurs. We use this symbol to remind ourselves that long term the market does trend higher and there are pockets of many long miserable bear markets, but those long miserable bear markets don't occur unless you break the 200-day moving average. And with sector rotation, um, sometimes you just need to give the market the benefit of the doubt from a broad perspective, not necessarily from a leadership perspective. We use two different ways of methods of investing. We use rules-based passive, and we use at the appropriate time aggressive growth stocks. So, what happened today after four down days, including two very ugly days last week, and really, frankly, a brutal day across the board, a brutal week across the board? We saw an oversold bounce. Is it something to get excited about? Not necessarily, because no significant ranges were broken to the upside. We did see it wasn't overly broad either, as there was the small and mid cap indexes did lag. But here are the numbers. Our 21 over 21 list: 15 up, 4 neutral, 2 down, led by Palantir, up 14% on the day after being added to the S&P 500. It's an AI stock. It's one of the few AI related tech names that has held up extremely well. The 21-21 up an average of 2.11% if you include that, since it was an outlier. If you don't include, it's still up an average of 1.51%. So a good showing by leading stocks. The big eight, this is our eight growth ETF composite, up 1.3. Sorry, that's not our eight growth ETF composite. That's the big eight. That's the Magnificent Seven plus Netflix. The big eight, or the RG8, is our eight growth ETF composite, up an average of 1.15%. S&P 500 opened up 0.7%. A couple of attempts to sell it off, especially in the morning, but the bulls showed up for now. So today's low for now. If it needs to hold, obviously, it's above the 20 week, it's above the 100-day moving average. And we're always looking for the green shoots, because not just because we're optimists, but because we want to be clear. Don't want to be the sky is falling type of people here at Revere. When it is, we'll let you know. But for now, just a mild correction, and Keep an eye on the recent lows and the ranges as we describe them in every video. Equal weight up a little less than 1%. NASDAQ 100 gap down 9/10, closed up 1.3, equal weight up 1%. Dow up 1.2. This was the disappointing, uh, the two disappointing indexes, mid caps and small caps, only up 0.46 and 0.3 respectively. In fact, the S&P 600 small cap was down 0.24%, but there was some rebalancing that went on over Friday after the close. That has something to do with that. Global diversified 60/40 stock and bond up 0.68. Our flagship GROTECTION portfolio up 0.47. We have 40% exposure to the S&P 500, a bond position, and three remaining quarter-size positions in the portfolio as we wait for the market to improve or give us some signs of improvement. So let's get into the charts. Let me turn off the stochastic, and you can see an inside day here after two really tough big down days last week. Tuesday kicking off September, Friday kicking off the end of the first week of September and breaking the 21 and 50-day moving averages very clearly. The purple line on the chart now is a 100-day moving average, and this is the range that we're focused on, the 50-day and the 100-day. We could play ping pong for a while in here, but the important thing is on a rally up to the 50-day, as it's just barely, it's really flat, has closed at 55.05 two straight days. We've got the 21 trying to break below it if the present trend changes. If that starts to roll over, we want to see what happens with price on a bounce up into that 50-day moving average. Will it fail? Or will it blast through it and the 21 and possibly kick off a new rally? On the downside, if today's bounce doesn't hold, obviously yesterday's or Friday's lows and even shorter term yesterday's lows, since we did see the bounce today, and then the 100-day moving average below that level. Let's look at a 5-minute chart. It was really a day of multiple trends in here with the gap up, and then we continued to run. But then a harsh sell-off. This was the bears trying to take control, and they just couldn't quite get there. Although we broke the opening 30-minute range, buyers came in and kicked off a decent bounce from 54.34, a full percent up to 54.84, and then just when you think, hey, we rolled back over all the way down to 54.49-ish, and then as soon as you think, oh, here we go again, you bounce into the close. And this is typical of what happens with markets that are not strong. This is certainly not strong. An inside day after a brutal down day on Friday. And this is the type of action that you get in markets that are looking for some type of direction. Onto the NASDAQ 100, inside day here as well. We've got the 100-day on here. This is really the 150-day and the 200-day is the range we're focused on here. Note the underperformance from the NASDAQ 100 going back to July. We are up a tiny bit after hours. Apple, when we get to the news today, they had their iPhone 16 kickoff presentation, and the stock was down most of the day, but rallied late. And that coincided with the late day rally in the market. But right now we're keeping an eye on the 150-day and the 200-day moving average for the NASDAQ 100. On to the Dow. Nice day today, recovering the 21-day moving average, up 1.2%. Note the relative strength, which is not necessarily a good thing, as this is a defensive index and we're growth investors. S&P 400 mid cap. Inside day closed at the bottom of the range, not what we really want to see, as you can see under the 21 and the 50-day and the 100-day moving averages. And the Russell 2000 small cap index sitting right on the 100-day moving average, also below the declining 21 and 50-day moving averages. Some serious relative weakness last week in small cap stocks. Let's take a look at the RSP. Reclaim the 21-day moving average. And again, if you're just looking at this and you see the relative strength here, This is completely the outperformance here is completely because of the underperformance of NASDAQ 100 type names, which make up a big percentage of the market cap weighted S&P 500. When those are underperforming, you're going to get outperformance by the equal weighted. Note again, going back to that same day in July, this is when the CPI report kind of put the inflation fears to bed. Since then, small and mid caps, and that's trickling over to the equal weighted index as some smaller big caps. They've outperformed the mega cap tech as uh, that's when profits started to be taken in those big cap tech names, and that's when the relative underperformance kicked in. All right, there's the major indexes. First, we'll go to the VIX. Big drop in the VIX today, 8.94%. We want to get this below the 21 day and down to the 16 level. We want volatility to compress. That builds more confidence in an uptrend. We want to see the under 16 gives us a daily range of 1% in the S&P 500, and that's really when the index does its best work. There's the VIX. How about the US dollar? After really some volatility last week, a second up day, as it looked like it might have had a shakeout to the downside, testing the lows of 2 weeks ago, and now up for a second day strongly. How did that impact precious metals? What's normally an inverse correlation, but not today, as they were up. Tightening a range here on gold, definitely. We're monitoring this triangle for a breakout, up 0.42% today. GDX, gold and silver stocks, certainly not performing as well, looking to clear that declining tops trend line, and silver also not looking so good. Bitcoin did bounce today, however, up 6.91%, just barely recapturing the losses of the ugly day that we had on Friday there. Let's go to bonds. Bond prices up, meaning yields down just slightly. That's been a pretty strong trend last week, was for yields to pull back and the prices to run. Here's the broad bond index, TLT. The long bond index up again. TYX, the 30-year yield, dropping. Keep an eye on these levels here. And TNX, the 10-year, down a bit as well. That's our inter-asset correlation chart section. Let's go to the tail of the tape. Really no significant news today. Apple new product launch. Next week we have the FOMC. Today's keys that we were watching, what was the S&P going to do versus this 50-day, 100-day range, and the NASDAQ versus the 150, 200-day range, both stayed within those ranges. This is our same key that we're looking for tomorrow to get some direction one way or the other. Day count down 4 with a 1-day bounce, 5 days below the declining 8-day and 21-day moving averages. Sectors, 11 out of 11 spider sectors up. Semiconductors, defensive stocks, meaning aerospace defense, and financials, industrials, and tech led the way to the upside. To the downside, not a whole lot, but oil producers, XOP, were negative, as well as solar. The portfolio, when you're in a downtrend below the 50-day moving average, we try to reduce our holdings in the leveraged indexes. They get their best return when you're in a strong uptrend. If it's choppy or if you're heading lower, the decay can kick in. So we move some exposure from UPRO to SPLG. And that history has told us that that's the best way to handle that. We normally keep a core 30% position in SPLG. And then if we're trending strongly above the 50-day moving average, we accentuate it with SPXL or UPRO. On the way down, our target exposure is 40% of the S&P above the 20-week moving average. So we're keeping that target in place, but we're using it all with the single weighted SPLG and not with the leveraged UPRO or SPXL. Mentioned the keys for tomorrow, but the bottom line for today, after 4 down days, an oversold bounce, mid caps and small caps lagging. Let's see what tomorrow brings. But now we'll go to the 21 over 21 list for this week, and we'll sort it by what was up the most on the day. There's two in here that we own. I'll point them out when we get to them, but let's start with Palantir with the big gap up. Volume not overwhelming, up almost 200%, but it did break this declining tops trend line. And if the market was better, this would be something that we would very much be interested in. We got stopped out last week on break below the 21-day moving average, but relatively, it has held up very well. Next up, IoT. This had earnings and making a day two higher high. See, this is another green shoot that makes you have a little bit of confidence in the market, but up making a day two higher high, up 4.8% on 155% above average volume. While I am thinking about it, I want to point out Oracle after hours up 9%. This is an AI play that hasn't fallen apart. Uh, Computer software database name. So that's going to gap out of this pretty nice looking 8-week long flat base, only 14% deep. Note it really hadn't done anything since its last earnings gap up report. In fact, just going sideways on a relative basis. But see if this can ignite tech in any way, shape, or form. Obviously, it's good to see a tech AI software name have a positive reaction to a report. Next up, new name to the 21 over 21 Guidewire. They had a gap up on earnings last week and an inside day today, up 3.9%. ServiceNow added with a bounce off the 21 day, showing some relative strength over the last week and a half. Kava, one of the two positions that we still own in here, up 3.4% on the week. Obviously, continues to be a nice winner and a relative strength winner as well. Axon, back above the 21-day moving average. Flutter, kind of a new name. Hadn't heard a whole lot about this, but chart looks good. Nice flat base, 23% deep, obvious relative strength. It's an Ireland company engaging in online betting. This is the parent company of FanDuel. Shark Ninja continues to hold up very well. Northrop Grumman comes into the 21-21 list as there have been a handful of aerospace defense names holding up pretty well. GE Vernova acting very well, also relative strength at new highs along with price. Lockheed Martin obviously continuing to act well, also another one of those aerospace names. Sprouts regaining the 21-day moving average. F5 trending still above the 21-day. ITB hanging on the 21-day. This is the home builders ETF. Ferrari, the second one that we own, pulling back to the 21-day moving average in a fairly gentle fashion. I would have liked to have seen lower volume the past couple of days where it pulled back, but no harm, no foul here. Normal pullback after a nice flat base breakout. Nutanix holding up, holding the bottom of its gap up day after its earnings report a week and a half ago. New name. CBOE, I could have put any of the four exchanges in here. There's also ICE, NDAQ, and the fourth one escapes me right now. But anyway, there's four of them. I picked CBOE. TOTL, this is the bond fund that we own. We want to keep this in here to keep keep an eye on the trend of interest rates coming down, and with that, the price of this should continue to go up. We evaluated about 10 ETFs, and this is the one I picked. It's not totally long term. There is some tactical decisions made. Jeff Gundlach, Dan's a big fan of Jeff Goodlock, as he calls him, but Double Line, a quality bond company. Bill Gross used to be the bond king decades ago. Jeff Gundlach is the bond king now. And we like the company, we like him, and we like this ETF. Fortinet, mild pullback today, still trending nicely above the 21. SE, Singapore Internet Retail, going sideways right above the 21-day. Affirm, 5-day pullback now, but still holding the low of this gap up day. And that's it. That is the 21 over 21 list for this week. The only time we boot something out is if we have a hard break of the 50-day moving average intra week. and we'll replace it with something. Otherwise, the return that we show for every day for the 2121 list is based on this list of leading stocks. And with that, I'm going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855 Real Wealth. That's 855 732 5932. If you're interested in becoming a client, had a lot of people reach out after my appearance on IBD Live last Friday. We'd love to talk to you. Email my partner, dan@revereasset.com. Reminder, our flagship portfolio, GROTECTION, is designed with a dual mandate. That is to grow assets during uptrends, back exposure off if that uptrend starts to bend, as it has been over the last 2 weeks, and absolutely get the heck out of the way during bear markets, as we displayed our way following our rules to get out of the 2022 bear market, losing less than half of what the market did. And same thing with COVID in the 2018 bear market, lost significantly less than the market. We're not perfect. We will have some negative returns at times, but we think we have a pretty good read on the market, and we display that every night on video here. And we appreciate the kind comments and the people that follow us. And with that, I'll wrap it for Monday, September 9th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.